When the open and close are both equal to the low of the session, we have the most bearish of doji, the Gravestone Doji. As for the Dragonfly Doji, there's no need to be rigid with the rules. As long as you apply the logic of the pattern to recognize where supply and demand are addressed, you will be able to read the market in the right way. So if we have a very small lower shadow, it's still fine. If we have a very small real body, well, we can still consider the candle as a Gravestone Doji. Talking about the Dragonfly Doji, we have said that it looks like a hammer. What about the Gravestone Doji? It's definitely a shooting star without a real body. You can also see that the Gravestone Doji appears during an uptrend, just like the shooting star. Here we have Euro-Dollar on a 4-hour chart. I give you 5 seconds to look for the Gravestone Doji. Okay, here we have the Gravestone Doji. If you paid close attention, you may have noticed another doji just 2 candles before the Gravestone Doji. The trend before the Gravestone Doji is clearly up. Buyers are winning the fight. The Gravestone Doji expresses the same concept that we have introduced with the shooting star. Buyers push the price higher from the very beginning of the session. Again, this is not a surprise because we are in an uptrend, so traders expect the price to go up. The surprise comes when sellers step into the market and manage to push the price back to the opening price. It may be that the market reached a point where the price is very convenient for the sellers, but is not so convenient for the buyers anymore. So the Gravestone Doji has the same logic of the shooting star, and we will use them in the same way during the course. Last doji we are going to analyze is named Long-Legged Doji or Rickshaw Man. This is a doji with an open and close at the middle of the candle's range or very close to the middle of the candle. There's no real body or a very small real body, and there are 2 long shadows that we can also call legs. That's why the name Long-Legged Doji. This pattern has a condition that you will not find so easily in other patterns. The long-legged doji is a reversal pattern whether it appears during a downtrend or an uptrend. Let's see the reason of this condition. The long upper shadow shows that the price rallied during the session. The long lower shadow shows a market that has sold off during the session. In other words, the market rallies, sells off, rallies, sells off, and continues like this, only to close the session at the opening price. So, after a downtrend or after an uptrend, this doji indicates that there has been much uncertainty in the market after a period of directional certainty. This change of conviction may result in a change of trend. Here we have Euro-Dollar on a daily chart. You can see a long-legged doji appearing at the end of an uptrend, creating uncertainty on the market. That could be the price where sellers find convenient to sell, increasing the supply and pushing the price down. Marubozu and belt hold lines. I'm pretty sure you were expecting 2 different patterns. Sorry to disappoint you, they are the same pattern. Traders call the single candle Marubozu, but when the candle appears at the end of the trend, they call the reversal pattern belt hold line. Since we don't really mind about the name of the pattern, we will only call this candle Marubozu. We will not use the other term belt hold lines. What is a Marubozu? A Marubozu is a candle with a long real body and no shadows. If the body of the candle is green, we have a bullish Marubozu. If the real body is red, we have a bearish Marubozu. Even for this pattern, I invite you to catch the logic behind it, so there's no need to be super rigid about the rules. If you see a very small upper shadow or a very small lower shadow, you can still consider the candle as a Marubozu. Let's consider a bullish Marubozu, for example. From the very beginning to the end of the session, buyers pushed the price higher, so this candle is the most powerful sign of buyers on the market. I want to give you an example of daily life experience because I like to show how Forex behavior is usually similar to other situations of normal life. Last Christmas, I wanted to buy a board game, so I went on Amazon and I looked for Speak Out. You probably know the game because it's become ridiculously popular last year. Anyway, the game was so popular that no seller in UK had the game anymore, and it was still November, more than 1 month before Christmas. Some days Amazon was receiving some stock like 200 pieces, but it was almost impossible to buy the game if you were not at the computer 24 hours per day, because those 200 pieces were gone in 15 minutes. Everyone wanted to make sure to have the game for Christmas. In Forex terms, we could say that buyers were increasing the demand. You can see here that the original price for the game is £21.99 in UK. By the end of November, Amazon was selling the game for £50 and the price was increasing every time Amazon received new stock. Now consider those 15 minutes that you could use to buy the game on Amazon as a Forex candlestick. The action of the buyers regarding that game can be compared to a Marubozu. Buyers start to buy from the first seconds that the board game is available on Amazon, and they only stop when the game is sold out. In Forex market, we see that buyers start to buy the couple from the beginning of the session to the end. Now the question is, if the buyers have been so active during the session and were still active by the end of the session, is it likely that they want to buy some more when the next session opens? Yes, that's why traders expect to see another bullish candle after a bullish Marubozu. So far, we have only seen reversal signals. Marubozu can be used as a reversal pattern and as a continuation one as well. If it appears going against the trend, like the one highlighted in yellow in this chart, it forms a reversal signal. Most of times this signal will be a bullish or bearish engulfing, a double candlestick pattern that we will study later on. If the Marubozu appears confirming the trend, like the two candles in this chart, it will form a continuation pattern.